Hi, it's Mike Swanson again. I'm here at Dave Skarica. I'm down in the Bahamas at his place, and it's wonderful. It's like paradise, and the weather's perfect, and it's nice to come down here. What lent you to move down here? I know you lived in Toronto, grew up there, and came all the way down here by yourself.
Yeah, I'm Canadian, and I grew up in Toronto, and freezing most of the summers. I guess one of the reasons, quite obvious, you just have to kind of look behind us, right? And we really lucked out, by the way. The weather actually hasn't been that great the last few weeks, and as soon as Mike and Howard came down, it was like a blessing. It's just the sun came out, the wind died down, everything. But I guess the Bahamas is unique, I guess, for three reasons for me. Number one, it's a British background, so obviously everyone speaks English. It's the British common law, and so we're in the same legal system as Canada. And and number two, there's a good proximity to the United States and North America. You're a 3-hour flight to Toronto, 3-hour flight to New York, a half an hour, 45-minute flight to Miami. And I guess the third one would be, somewhat taxes. Obviously weather being, kind of assumed. But I was kind of, I'm not going to call it brainwashed, but I was brought up in a certain way where we were kind of very libertarian leaning in my family. And my father was actually a conservative MPP for a while in Canada. And the one thing he actually obviously hated is he had a government job where he was a Crown attorney, and he made good money, and he's a workaholic. And, when I was a kid, I remember being up to midnight, 1 a.m., and he would just complain all the time about the income taxes in Canada, how excessive they were. For example, in Canada, if you make over $60,000 a year, anything you make over 60 is taxed at 45%.
Oh, that's crazy.
Right? Which makes, I don't want to get too political, but that makes Obama look like a hardcore capitalist.
Yeah, that's crazy.
Right?
I mean, what the world?
So part of the reason was, when my father was in politics, I kind of saw, you kind of see politics for what it is, and it's not so much the political system itself, but you see the bureaucracies, you see the waste that goes on in government, etc. Right? So what I decided to do is, I just didn't want to pay taxes because it was just our income tax, because I just didn't see real benefits.
How can you not pay taxes by moving down here?
Well, first of all, I was going to show you how I was brought up here. This is a book called 225 Tax Havens in the World by a guy named Gerhard Kurtz, and this is funny, I brought this down here with me. This is actually published in 1993, and he talks about places in the world. Actually, the Bahamas is one of the top places in the world to live for paying taxes. They have something called Tax Freedom Day. And for example, in the United States, Tax Freedom Day arrives in about May to June, and that's including all your taxes, income tax, sales tax, and that's the day you start working for yourself instead of for the government.
Right.
Right? And Canada it starts in July or August, and the Bahamas, I think, it starts sometime in February, right? So, because you do pay taxes down here in the form of duties and the whatnot. So how do not pay taxes are quite simple. And, this is kind of, I'm setting up some things to tell people how to do this. In Europe and Canada, it's unlike America. Actually, America's about the only country in the world like this. We are taxed on residency, not on citizenship.
Okay.
Right? So if I move outside of Canada, I got rid of all my assets in Canada, which I do. I don't have bank accounts in Canada anymore, etc. Right? I'm what's called a non-resident. So I'm still Canadian. I still have my Canadian passport, but I pay taxes where I'm domiciled, where I'm a resident, which right now is the Bahamas, which has zero income tax. Right? So Americans are taxed on citizenship. So if you move to the Bahamas, there is a certain sum, which is about, I think it's about $100,000 a year you can make without, being a non-resident as an American citizen, where you don't pay taxes. But if you, for example, are doing very well, you still have to file with the IRS and pay American income tax, even though, say, you're working in the Bahamas or living in Australia.
So, by being a Canadian, you can have this dual citizenship, I understand, right? Where you can move down here, keep your Canadian citizenship, but you don't pay the taxes for Canada.
That's
you only
exactly
pay
right.
taxes for Bahamas.
And it's perfectly legal.
And in the Bahamas, there's no income tax.
That's right.
So that's how you're doing it. You're in basically the domain of the Bahamas tax system.
Yeah.
And not in the Canadian tax system.
Just like, say, if I lived in the States, I'd be in the domain of the American tax system. And a lot of Canadians and a lot of Americans may roll their eyes at this, move to the States for that reason. Because, you guys may think your tax system is excessive, but it's a lot less than Canada.
Yeah, when you say,
right?
What was it, 60,000?
Yeah, 45%.
You'd have to make, apparently now $250 to be taxed at something
like if
that.
you made 250 in Canada, you'll probably end up paying 100 in income tax.
Well, why
where
would
in
you
the
even
States,
try to
you're
make
gonna be
even
like
more than
70
that?
or something.
I mean, if you're making 250,000, why try to make 500 if they're going to tax you or something like that?
That's a good question, and that's a socialistic, system. I guess people really just have a drive to make money more than anything, or a drive to be successful.
Yeah.
Because actually, I'm one of those that I don't know. I definitely work hard, but I'm definitely one of those guys that to me there isn't much of a incentive to make 200 instead of 150. If I know on that extra 50, I'm paying 22 of it to the government, right?
But as an American, I can't do that. I can't move down here and get in this dual system.
Well, like I said, you can become a non-resident, and then the first 100,000 you make is fine,
okay.
right? As a non-resident, but if you start making 250, 260, after the 100, you're going to be taxed, and you're going to have to file and cut a check to the IRS. Now, I'm not a tax expert, so if someone wants to email me and tell me I'm wrong on this, they can just go ahead, right? So, and just so you know, when I had this book, I was reading this when I was 16 years old, bringing it in the bathroom with me, right? So, my dad always says, I had a demented kid because he's reading 225 tax days in the world instead of Playboy, right? When he's 17 years old, and I said, no, Dad, the Playboy was just, kind of stuffed inside, right? So, so then, and we were going on in our earlier interview, right, about. I guess some of the other books I'd written, and we'll just go over this quickly.
That's right.
Especially pertains to what's going on today in the stock market. I wrote this book in late '98. It was published in late '98, early '99, and basically this predicted what's going on in the last 10 years. I predicted that you wanted to be in hard assets, you want to be gold, you want to be oil or gas, even with their recent pullbacks, they're still way higher than where they were 10 years ago.
This is in 1998.
1998, kind of in the midst of the internet bubble, and even the internet.
But you stayed bullish though until 2000.
On the stock market?
Yeah.
See, I got out a little late. Remember there was the crash in about March or April?
Yeah, March,
and then there was
2000.
a big bear market rally. I basically got out in that bear market rally. So I missed the initial, I was a little late, but still I got out probably between 3,500 and 4,000 on the NASDAQ.
Well, saying is you wrote this book in 98, but even though you had the title of this book like that, you were saying this is what's coming, but it's not here exactly yet.
Yeah, and I actually even wrote that in my newsletter at the time. I got ravingly bullish at the bottom of 98 when the Fed cut rates. It was actually one of the first good market calls I made. Mm-hmm. But I also it was interesting, it was the first newsletter I ever wrote, and what I wrote in it is that this is going to cause a massive bubble in stocks.
It sure did that.
It went way farther than I thought. But that's interesting to what's going on now, because this book is bullish on commodities and bearish on financial assets like housing and stocks, etc. And now I believe we're going to create a bubble from all this liquidity, but of a different kind. That we're going to pop the bubble in the bond market, and then the U.S. dollar is going to go down, and we're going to see a bull market in commodities, right? Kind of like what Jim Rogers is talking about at the moment, same similar thing. So I think now all this liquidity added to the system is going to cause another bubble and something that I'm bullish on. But basically my conclusion from this book, and still conclusion, and I've written some recent articles on this, is we were in a long-term trading range. In 1966, the Dow was 1,000. In 1982, the Dow was 800. Okay, and it lost 75% adjusted for inflation. If you took the way they calculated inflation pre-1990, when they started massaging the numbers to count inflation lower than it is, the Dow is right now down 60% from its 2000 high, inflation adjusted. And the interesting thing is, from 29 to 48, and from 66 to 82, the Dow lost 75% in each case, inflation adjusted. So that seems to be, so that would mean, let's say we use the Dow at 100 at the top in 2000. We're at 60. Probably going to go to 25, which means we have another 40% to go. That's 40%, again, inflation adjusted. So I don't know if the Dow is going to 6,000, right? But I know it's probably going to go down another 40% inflation adjusted, and it will probably take another 10 years to do that. Mm-hmm. So that's my basic, and I was 21 years old when I wrote this book, and I just think that I'm still believing that right now I think we're in stocks in kind of the mid to late 30s and in the mid 70s, that we were in the midst of
a secular bear market, the middle of it.
Maybe the busts have been seen. We saw the internet bubble bust. We've seen the credit bubble bust.
Yeah, real estate.
The real estate. So maybe the worst of the declines is over, but the actual bear market is not over yet.
Well, what's the other book you have?
The other book I have is, and this is interesting, if you have kids who you want to teach about financial markets and trading, this book I wrote in 2004, and this is called The Contrarian, How the Contrarian Saved the World. And what this is basically is, it's a very light fictional novel. It's the basic, premise is that there's this asteroid about to hit the Earth, and this kid, Alex, loosely based on myself, has to basically use his trading to make money to build this solar beam to blow up this asteroid, to save the world. But what this talks about is he basically is trading market cycles in this. So it talks about, what he does, kind of he shorts the market at the top. It kind of goes on in that 2000 period, and he buys gold stocks, and he does this leverage, or this counter trade, and it makes him the money to do it. So what this explains to you is, it talks about these market cycles, how there's up cycles and down cycles, and it talks about, why there's bear markets and bull markets and stuff. And it does it in a very light, kind of funny, easy to read manner. So if you have a teenager or people in their early 20s, say going from university and they're just about to start making money, you want to teach them about the market. This is a little 80-page novella, and it's done in a very simple, easy to read way. And just so you know, starting shortly, we'll be selling these books on my site and top having to go to the publisher, so you could just, we'll just process it and mail it out to you. So, if you want to, so I just wanted to show these are two, books I've written. I'm working on a third book which talks about what we just talked about. How we're still in the midst of this commodity bull market, I think, and in the midst of this stock bear market, And also being in the Bahamas, this is the final book here. This is a book that was published earlier this year, and he just kind of passed away, about John Temple, called The Templeton Way. He lived in Lyford Cay. Very unique guy. We're talking about taxes, because what he did, he was an American citizen. And what he did, basically, is, this talks about some of his scores. It's really funny, he revoked his American citizenship, was knighted by the British, became a British citizen, and moved down here so he didn't have to pay income tax. And one of the reasons he did it, it's not anti-American, he said that taxes screwed up his investment philosophy. Because they would, capital gains would train in, because he would think about, well, I shouldn't sell this because, capital gains is going to reduce the return.
Yeah.
And once he got down here, he didn't have to worry about taxes anymore, so he could just trade based on his philosophy. And the second thing that is really interesting is that, Mike lives in Danville and I live down here. And I remember a friend of mine in the mining industry recently asked me, Dave, do you find that you get out of a loop since you moved down there? And I kind of thought that over, and I actually wish, even we're talking about, it's great to have some of these connections that I have, but to a certain degree, it's good to be out of the loop.
Yeah.
In ways sometimes I wish I was a little more out of the loop, right? That, what he talked about is that he didn't get all the same presentations that all the brokers and all the analysts were getting on Wall Street, and he became a really independent thinker, and it was easier to be a contrarian because he wasn't influenced by everyone on the street, because he's down here in the Bahamas, kind of like me working. No,
I definitely believe that myself, that by you living here and me living where I do, we're so far away from Wall Street, or I guess there's probably lots of people in Los Angeles, financial people too, that we're not really so influenced by those people. We're not living that kind of life day by day. I mean, yeah, we may talk to people every once in a while, but it's kind of our choice to do it. We're not, we don't have to compete with these people, go out socially with them all the time and all this stuff. So we're not living that kind of lifestyle.
Or when I go to Toronto, I go to presentations by companies. And again, you're not competing with that. You're not hearing it. You're not getting reinforced by other analysts. You can be a real independent thinker. Right now, some companies are writing me, and I'm saying with all due respect right now, because where the gold market is, I'm looking at production and cash flow. The juniors are going to take a while to come back. So if it's a pure exploration company, I'm not all that interested. But if I was in Toronto and I heard a great story, I might be a little more influenced right now. So I think you living in Danville, me living in the Bahamas, and I think in a way that is a real positive.
And you look at these people on Wall Street, they're all blowing themselves up because they're all like herds doing the same stuff. All these hedge fund guys making the same bets, and they were betting on mortgages a year ago, and they blew up.
And they were, even though I'm a bull on commodities, they came into the commodities.
It doesn't make them smarter. Yeah. I think that's part of the disadvantage, that they're all listening to each other and trying to duplicate each other, and it didn't work out for them too well.
Yeah. Yeah, because I've heard conversations with like guys I know in Boston who are talking to hedge fund managers, and they're talking about conversations they're having that are like in the summer, all the hedge fund managers were starting to get out of commodities and getting into something else, and they're all doing, the kind of like the same thing and the same trades, and like being down here, it kind of helps me out to a certain degree,
Well, I guess we'll better take off. Time's running out. We'll have to go somewhere, so we'll be talking to y'all later.